A number of reasons. So first of all, Facebook is so overly loved and so overly owned. It's almost reached that cult-like status. That doesn't mean anything for a stock going down for years to come. But I really think the news that came out with their earnings report was so bad long-term. They didn't just miss for a quarter. They didn't just say, hey, the next couple of quarters are going to be a challenge. They said, we see decelerating growth as far as the eye can see with no qualifier. For a stock that's gone up at a meteoric pace and almost, parabolic, and it's overloved and overowned, and it's got so much hot air, and it's really expensive, that's almost a seminal event. That's a catalyst. So if they had said that in 2013, I'd have a different viewpoint. The bull market itself is 9 1/3 years old. The bull market's been living on FANG stocks. Think of how the environment for tech has been. It couldn't have gotten any better through January. I mean, everything in tech has been just perfect.
Paul, what's a fair price
layup.
for Facebook? Fair price for Facebook right now?
Now, to be fair, I'm not a fundamental analyst. I could just tell you that if my thesis plays out, the next stop was probably below, 165 and then below 149. And I think listen, I've been a bull for so many years on balance, the whole bull market. This is not some perma-bear coming out. I think ultimately by 2020, 21, maybe 22, I think Facebook is a $100 stock, maybe even is in the 90s. The headwinds have really increased. You're late in the bull market cycle, number one. That's a big picture problem, right? You have this decelerating growth as far as the eye can see. You've got tech regulation. No one's even talking about that anymore. They're going to regulate tech. It's coming. So you've got headwind after headwind coming. And let's not forget, I don't want to say social media is saturated. That's an exaggeration, but my 15-year-old, 13-year-old, 10-year-old laugh at me because I live on Facebook. So the next generation certainly is not going to be like it is right now. There's so many things. I think if you said to me, hey, how am I going to be wrong? Because I always want to know if I'm going to be wrong. I would say to you, well, free cash flow growth has to be at least 5%. And if it doesn't, which I don't think it's going to be, they will continue to revalue that stock. A bear market's coming at some point. I think we have a recession somewhere between mid-19 and mid-20. I think the stock market probably goes down 25, 35.
Those are all fascinating macro calls, but if you're going to come on the show and talk down Facebook, give me the exact rationale for what the price should be of Facebook.
Right. So ultimately, we don't know what free cash flow growth goes to. I don't think it stays 5%. I think it goes 4, then 3, and possibly 2.5. If that's the case, certainly the stock goes below 150. And as we go on in years, I think that translates, just like we saw after the dot-com bubble bursting, I think that translates into maybe $100. Okay, is the company done? No. But all the good news has been baked in the stock.
Paul,
I mean, it couldn't get any better. And if it can't get any better, it's going to go one place.
So I understand your rationale. But as a long-term equity investor, you must understand there's risk in any stock that you invest in. And given the last call, which was, hey, guess what? We're reinvesting in our business and kind of rebasing where we're going. And it's not just Facebook. It's also Instagram. And it's kind of, the WhatsApp. There's other things there. And by the way, this is a cash flow positive company. Great margins. And I do agree with you. Margins go down. But over a period of time, they do have an install base that actually moves across different demographics. So while I think it's easy to beat up on Facebook, it is a company that is a global company that I think in the next 2-3 years will come back. Maybe not in the next 6 months, but on a stock specific, I disagree.
Listen, earlier in this show, you guys had Santoli on talking about Microsoft in '99. Right? It was a global great company in '99. It 10 years, the company was still great, but the stock price was down and really, really struggled. I think this Facebook is similar. Long term, listen, it's a great story. There's billions of users, blah, blah, blah. But it was baked, it was priced for perfection.
Paul,
that decelerating growth, as far as the eye can see, this is not an earnings miss this is a long-term problem they have.
Paul,